everyone, and welcome to the Asset Preservation Hour. I'm your host, Paul Gaphart, with my guest today, Mr. Stewart Willis of Asset Preservation, Tax, and Retirement. Welcome back to the show, my friend.
Oh, thanks so much for being here.
I'm excited, man, because today we're going to talk about this crazy economy and what's going on, Stu. I mean, look, it's boomtown, right?
Well, it feels that way, and I think I think a lot of people have a hard time seeing the forest through the trees, and I think that right now, Paul, it's really important to know where we are, right?
Yes.
And I have a slide here of the S&P 500. I show it all the time, but it's just a reminder to tell people where we actually are here. So if you take a look at this here, this S&P 500 chart, you can see how high we are. We're at the highest peak in market history, plus or minus a couple points. And so, Paul, I think it's really important to understand that people have to know where we are.
Yes,
right?
That's true.
And I think that sometimes they've lost their way. Also, not only are we at the highest stock market in history, as I've said before, we're at the lowest interest rate environment in history as well. And let me show you the 10-year Treasury once again. The 10-year Treasury right here will show you that peak that you see on the left is in the 80s. I know it's kind of small type there, but to the right, that's where we are today. And we are at the lowest interest rate environment in history. And I don't know if you saw that blip that happened there, that little U about a year ago in there. Well, that raising interest rate environment, the 10-year Treasury went from a low of right around 0.48%, all the way now up to the 1.5+% range. So, we've seen a darn near tripling of the interest rate. And what does that mean for people? Well, for people that have bond portfolios, they've gotten hit really, really hard.
Yeah.
And so oftentimes where people have run to in the past, it just doesn't exist anymore as a safe haven.
Yes. Where is the safe haven? Exactly. I was wondering, so in regards to the economy, what are you hearing people say about what's to come, Stu?
Well, I think, we have to separate the two items. The economy and the stock market are two different things, right? So when it comes to the stock market, I think a lot of people realize that, rising tides float all boats, as, Warren Buffett always says, right?
Yes.
But there's other people out there that are completely delusional, that believe that they're the most amazing stock pickers in history. I always say a blind chicken could have done well in this environment.
No doubt.
From the bottom of 2009, the stock market has multiplied 600% from the bottom. So, if you haven't made money over the last 12 years, you got to figure it out there.
Yes.
The question is, has your money multiplied 500%, 600% over the last 12 years? And if it hasn't, you haven't kept up with the stock market. So, even, with Bitcoin and all of these kind of alternative investments, a lot of people just like to be involved. This is really reminiscent of the 1990s, where the dot-com boom. I was raised in San Diego, and we had a local company, phenomenal company, Qualcomm. And they were actually clients of my mom's at the time, and my mom knew nothing about stocks, but the Jacobs family, phenomenal family out of San Diego, were my mom's clients. And my mom ran a day spa. She didn't know anything about stocks. And, I was just out of Berkeley, and I didn't know anything about stocks either at the time. Trust me. I had some licenses back then, but anybody who would have invested with me back then was, I don't know, goofy or something. But at the end of the day, she put her $20,000 in 1999, and that $20,000 went up to $25,000 in about a month. But guess what? 6 months later, that $20,000 was down to $9,000. So just remember, we've had this amazing run in the market, and people have to realize the risks that are out there. And I think it's really important for them to figure out where we are.
Yeah, and to your point, Stu, I think a lot of times when you see that, with the market going the way it has for 10 to 12 years, we have a tendency to get comfortable.
Yeah,
seeing those gains, and that could be incredibly dangerous for the investor, right?
Well, that's absolutely it. And I think that a lot of people have to know that a downturn is imminent. It's coming.
Yeah.
Right? We all know it's coming, and they just have to be prepared.
So what are some of the strategies you have for folks to guard against a downturn like that in the market?
Well, I think first of all, people should just know their options. One of the options, for example, we have a lot of clients that are calling into us. They're saying, look, I'm 59 years old, I'm 60 years old, I'm concerned about my 401k, and we have very limited choices. Well, the one solution that's available is for most companies, if you're 59 and a half years old, you actually have some investment choices outside of your existing plan without disrupting your existing plan. So typically there's a 59 and a half age in-service distribution option that allows you to roll over your 401k to an IRA to have it professionally managed. That's not always the best case for everybody. There's some downsides to it, like loan provisions and things like that. So you have to find out, from a fiduciary whether or not that's really in your best interest. But first of all, know your options. So the 59 and a half age is a big deal. Number two, to protect yourself against these downturns, diversification. I think diversification, everybody knows you need to have a diversification of your investments. What I've said before is it's not just about a diversification of your investments, which is to not have all your eggs in one basket, right? It's also about having a diversification of perspectives. And what I mean by that is that, let's just think about this. If you watch one news channel, you see the world one way. If you watch one of the right-leaning ones, you see the world differently, right?
Yes.
So if you're on a left-leaning and a right-leaning, you think you're on a different planet when you're watching the news, right?
It's true.
Two different worlds going on.
Different perspective.
Right?
Absolutely.
So if two rational, smart people can see the world that differently, don't you think that affects your financial advisor or your money manager? So not only do I think you should have a diversification of investments, but also a diversification of perspectives to make sure, are you really willing to bet your entire life savings on what one person sees, on how one person perceives the world? I think that's an incredibly dangerous bet.
I agree with you.
So at Asset Preservation, the nice thing is we have multiple perspectives. We have multiple money managers. We never like to have everybody's eggs in one basket, even within our own firm. But also a diversification of tax classes. So when we talk about diversification of tax classes is, we talked about Roth conversions and all of that in previous shows, but some people don't have it. They have everything in a 401k that's tax deferred. Well, now you've created this massive tax time bomb, and it paints you into a corner to not be able to enjoy your life savings because you're so afraid of paying a damn tax bill that you're not going to actually enjoy any of your money.
That's
right?
the truth. Absolutely.
Right. So we think diversification of tax strategies makes sense. Have some Roth, have some IRA, have some non-qualified assets. You need to have multiple buckets of money when it comes to investing your assets.
I love what you said, Stu, and I can't put any more emphasis to the viewer out there. Know your options. To Stu's point, there are options. If you're not sure, if you have questions, you got to ask. So let's say the good folks out there have a lot of questions for you. I understand you have a special offer if they reach out and call today. Stu, would you share that?
Yeah. So if you give us a call today at 833-652-7829, what we're offering the audience today is a complimentary portfolio review. And in that complimentary portfolio review, what we're going to look at is all of the risks, all of the fees, any tax issues we see, and all you'll have to do is give us a call or click on this QR code that we're putting up on the screen right here. If you click on that, it'll take you to www.apsitaxes.com. You can sign up for a complimentary portfolio review. We'd be glad to look. We have offices in Scottsdale, here in Tempe, where we film all of our TV shows, and also in the West Valley, where we service Sun City, Peoria, and all the surrounding areas there. But all you have to do is take action. Give us a call, 833-652-7829. We'd be glad to look.
I think the key word is a phrase, to keep going back to it, is to know your options. It's about asset preservation. Because the one thing none of us can stand to lose is the time we invested. It took a lot of time to get to where you are. Are you going where you hoped you would? This is the time to reach out, give Stu and his team a call, to get that second opinion, to make sure your goals are achievable. 833-652-7829. We're going to take a quick break. We'll be right back after these messages.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
Welcome back, everybody, to the Asset Preservation Hour. I'm your host, Paul Gaphart, and again, my guest is Stewart Willis of Asset Preservation, Tax and Retirement Services. Incredible segment on diversification, but there's one more point. There's other options available when you talk about diversification. You were sharing with me in the break. Would you share that with everybody, Stu?
Yeah, absolutely. So we talked about a diversification of investments, a diversification of perspectives, a diversification of tax strategies, but it's also important to have a diversification of investment strategies. And so the reason we say that is, when we talked about this rising stock market, what people have done is gone into S&P 500 funds, QQQ, Dow Jones, and once again, everybody's done well. Well, that is what we would call a passive approach, when you just kind of set it, forget about it, and you do exactly what the market does. At Asset Preservation, one of the methods that we use, one of the strategies we use, is actually tactical asset management. Now, I have a slide for you that'll show you what a classical asset allocation looks like. So on the left, you'll see the young investor slide, where that slide there will show you a pretty aggressive account where it's 20% bonds, 80% equities. Then as you get closer to retirement, it gets less and less aggressive, right? So less equities, more bonds, more cash, etc. Now, that's very standard for what we see in the market for people that have classical asset allocation models. At Asset Preservation, what we like to do is introduce a tactical model. Now, this here is an example of one of our algorithm money managers. And what they have done is they've identified 6 distinct stages in the economic cycle. And, just use your logic in the back of your head that, when we're entering into a high inflation territory, like you see the curve over on the far right, that's when you start selling some inflation sensitive investments. But the question here, Paul, is to know, where are we at in this environment, right?
Right.
And that's what these money managers are for. If you're sitting in front of a financial advisor that's the guy picking your mutual funds for you, that is picking your stocks for you, honestly, I'd say get up and take off, because, listen, I went to one of the best public universities in the world, and I thought I was one of the smartest people in the world until I got there. And then I realized I wasn't. And I think the most dangerous advisor is the guy that thinks he's really way smarter than he is. We're surrounded by some of the best money managers on the planet. We have the biggest money manager in the world overseeing some of our portfolios. We have a tactical algorithm money manager. We have David Young, formerly of PIMCO, handling some others. It's really important to have this broad diversification of perspectives and strategies in your portfolio, not just relying on what the guy down the hall thinks you should be buying.
I love that. And isn't that one of the key points to a second opinion too, Stu, is that there are different phases in your life, right? So in the earlier stages, when you're young and you're accumulating assets is one thing, but when you start to get closer to retirement, shouldn't they be seeking out someone who specializes in retirement?
Yeah, I mean, I think that, most people can figure out the accumulation stage pretty well. But now what we're doing is we're seeing people that are going into the preservation stage, right? And when it comes to preservation, one of the biggest things to eat up your retirement accounts, number one is inflation. We are seeing record 6% plus inflation right now. All of the talk of that being transitory is nonsense. We all know that there's some, problems, some systemic problems that are deep that are happening, and we need to be prepared for this inflation. Because even if the stock market continues to rise, that's great. But what about when it costs, $22 for a gallon of milk, right?
Right.
What are you going to do?
Yeah.
What is your plan for that,
Yep.
So we talk about inflation. Also taxes.
Yes. And to that point, so what can someone do to go about creating like a tax-efficient estate, Stu?
Well, I think the one thing that people need to do is they need to have a tax strategy. We are in the lowest tax environment in history right now. I use this slide all the time. I'm going to bring it up again. It's our tax slide. And what that slide is going to show you is an overlay of the two different tax plans. So the blue in 2017 was the Obama era tax rates. In red was what happened after the Trump tax cuts. And listen, I say this over and over again. I don't care if you think Trump is a hero or an idiot. Doesn't matter to me. Right? What matters is where we are today. And in the red, if you take a look at this, most of our clients are between the 12% bracket and the 24% bracket. And look at the tremendous tax cuts those people are enjoying over that period of time. So I think it's super, super crucial to consider this, to know where we are. So even if you didn't like Trump, right, you need to make sure you take advantage of where we are. And I think it's, super important. People don't realize they carry their emotions on their sleeves. Once again, goes back to what news channel they're watching, right?
Right. And to your point, I mean, this is the importance of the business of retirement. Right, Stu?
100%.
Folks need to really be treating this as if it's their business.
Absolutely.
So let me ask you this question. So can't the audience just go to a traditional tax preparer to help them on a tax efficient plan like they've always done? I mean, isn't that what tax preparers do?
Well, you know what? Tax preparation, we've talked about the difference between tax preparation and tax planning in the past. I can't say it, but I know what I'm talking about.
You know what I mean, right?
I'm like a marble mouth right now. I actually had a client call into the audience and said, what the heck are you doing on TV? This guy can't even speak. He says too much. But no, listen, when it comes to a tax plan, tax preparers are really, really good at saving you money that year. And what we have to do is when we hire new tax preparers, we have to get them out of the habit of just worrying about how to save you tax today. Because let's rewind a couple years ago, right? You're in there filing your taxes and your CPA or your tax preparer at the local tax office says, hey, you know what? If you contribute $6,000 into your IRA, you're going to save $2,000 right now. So doesn't that make sense? And you're like, well, heck yeah, I want to save $2,000. But what you don't realize is that you're saving taxes for a time where taxes are going to be higher. Not just in terms of your case, but also you're going to have more assets that are exposed to taxes, right? You may have 401ks coming out, your Social Security, all of those other things. And remember, the Trump tax cuts are sunsetting in 2026. So we are in this efficient window. We have a few years left to really create a plan, and people are always going to look back and say, I should have done it then. I should have done it.
True.
You need to take action.
Yeah. So let's say folks out there, they're done with procrastination. They're ready to go.
Yeah.
Could you remind them of what you're offering today when they call in, Stu?
Yeah. If you just give us a call at 833-652-7829, what we'll do is we'll take a look at whether or not we think that there's any tax issues out there from your tax deferral plan. Right? Have you created this tax time bomb that we've been warning you about? We'll take a look at what kind of risks you have in your portfolio, what kind of fees you're paying, and most importantly, are you dealing with a fiduciary? Just give us a call, 833-652-7829, or you can click on our QR code that we have on the screen right there. That will take you directly to our website at www.apsitaxes.com. We'd be glad to help. All you have to do is take action.
You know what? I want to share this with you. If you're like me, you think a lot about your investments. 0.5% there, a 1% gain here. But the thing that we overlook is the impact on that nest egg by not having a tax strategy. 20 to 30%, right, Stu? It could be, I mean, that's huge. Think about your nest egg right now. You can't afford to overlook that, okay? We're going to talk more about tax-efficient strategies. Stu's got some good ideas, and if he sounds like a marble mouth, you know what that's about? He's excited about the subject. That's what excitement does. When you love what you do and you're excited about it, that's what happens. But this is the deal. You got questions. Stu and his team have answers. That's what you want. Peace of mind. That's what this is about. 833-652-7829. We're going to take a quick break. We'll be right back after these messages.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
Welcome back, everybody, to the Asset Preservation Hour. I'm your host, Paul Gaphart. We want to thank you so much for being with us today. Our guest has been Stewart Willis of Asset Preservation Tax and Retirement Services. Stu, again, I love your passion for this. I just love, you want to get everything in for people because you want to help them. And that's what it's about, folks. I mean, look, think about all the things in your life, right? When you go to pick someone to help you along the way, shouldn't they kind of be interested and excited about what they're talking about? You know, if they're not, well, chances are you probably should keep looking, right? You want someone who cares about the topic, right? You know, I can't stress enough the tax efficiency, and I know that's a big thing for you. Will you share a little bit more with folks some other strategies they can implement?
Yeah, so first of all, it's Roth conversions, Roth conversions, Roth conversions. That's our key play. But also, it's about harvesting gains. Now, what we mean by this is, I had a client who was a very successful man in his former life, we'll call it. You know, during his business years, built a tremendous local company, and he came to me. And I made a recommendation to him, and it was revolving around a growth strategy. And he said, Stewart, listen, if you're not talking about dividends, I'm not interested. We're not talking the same language. I said, well, it doesn't make any sense. And after he showed me his tax returns and so forth, I said, listen, here's the problem. All you've cared about is dividends, but there's obviously an issue going on in your past. And I looked at his tax return. He had $500,000 of carry forward capital losses. Now, those capital losses were from investments gone awry, right? And so, Paul, if a client has all of these carry forward capital losses, we can harvest against them. So what the heck do you care about whether or not it comes as a dividend or as a distribution from a capital gain, from a long-term capital gain? Because remember, we can harvest that long-term gain against all of those carry forward capital losses. It's tremendously important to look at every aspect of it. And right now, look, in Arizona here, we are not only in this massive stock market boom, we're in a massive real estate boom right now. And I think people are also kind of getting nervous to say, hey, maybe it's time to take some of those chips off the table as well. Does it make sense? Does it not? Because capital gains, remember, in the new tax plan, capital gains are going up for some people, right? Is it going to affect you personally? I think it's really important to find out. So we have tons of clients that are saying, hey, what do you think? I've got these 3 rental properties. They're fully depreciated. Should we get rid of them? Well, Paul, everybody's situation's different.
So true.
Right?
Absolutely right. And that's what this is about, too, is a personalized plan to know the individual's goals, right?
Absolutely. You know, listen, different people have different situations. And if you're listening to your friends at the water cooler every day about what you should be doing with your Roth conversion, or, I mean, just stop it. I mean, it's a problem. That'll get you into, deep trouble. Listen, we don't have very much time left in this, very efficient tax window. It's super important. Does it make sense to get rid of some of those commercial buildings or those, rental properties you've owned forever that are fully depreciated? Well, maybe. understand real estate has been one of the greatest investments for our clients because not only has it appreciated in value, you've been able to depreciate those properties over all these years. And basically a lot of the income you've received has been tax-free because of that depreciation offsetting it. So those are really, really good reasons to buy. But understand, as the tax environment changes and as this new administration is talking about getting rid of step-up in basis, that it basically allows you to wipe out all your gains when you pass it to your kids, well, if that goes away, it's really hell in a handbasket here, and that's when we're going to start seeing a flooding of these long-term capital assets. So just have a strategy. And I think it's really important to know, what is the tax implication for selling?
Yeah, absolutely.
Does it make sense?
Right. What do you say to folks out there in the Phoenix area, the good people out there thinking, why don't I just go to my current financial advisor for tax planning help?
Well, most financial advisors actually just are not even allowed to talk about taxes. They're prohibited by their firm. So a lot of these big box firms, will say, we do not give tax advice or legal advice because they just don't want the litigation that's involved with it. Well, understand that's the whole reason we have a tax office at Asset Preservation, Tax and Retirement, is so that we can look at what really matters. Remember, it's not just about what you make, it's about what you keep. And at the end of the day, if Uncle Sam is taking too much, that's a problem. Listen, tax evasion is a crime, but tax planning, it's your duty. So just know that we're in the super efficient window right now. If you don't take advantage of it where we are right now, I promise you, you're going to look back and regret it. It's super important. Listen, whether it's with us or your other tax advisor, give them a call. Give somebody a call, but make a plan. We've got very limited time till the end of the year here.
Speaking of limited time, we're out of time. Stu, would you mind the good folks out there what you are offering if they call in today?
Yeah, absolutely, Paul. Thank you. What we're going to do is, once again, offer a complimentary portfolio review. All you have to do is give us a call at 833-652-7829. We'll look at all your risks, your fees, your taxes. Are there any gains that we can harvest there that are lurking out there that you know nothing about or know a little bit about? Who knows? Give us a call. We'd be glad to help.
That's great. As the old adage says, time flies when you're having fun. But the question is, are you having fun? You should be. 833-652-7829. We want to thank you so much for being with us. Be well and enjoy your retirement.